Hey everyone, in this video I'll talk about three main things about Supermicro computer stock that all investors should know. I'll start with how Supermicro computer is partnering with NVIDIA and AMD and Intel to help deliver their GPUs on a large scale. Then I'll go into Supermicro computer's manufacturing plans. Of course, revenue and demand is surging, but how is Supermicro computer adjusting to that? I'll go in a little bit of detail about that. And then finally, I'll end the video talking about Supermicro computer's forecast for the rest of the year. And for Supermicro computer, there isn't very much left in its fiscal year. So I'll go into detail about its forecasts and guidance. So without further ado, let's get into the details. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Supermicro Computer says that they are leading the AI revolution by deploying the NVIDIA HGX H100 supercluster solution to their customers. And these are NVIDIA's GPUs, graphic processing units that are highly in demand for companies that are both training artificial intelligence systems, large language models, and the inferencing from those large language models. NVIDIA is the best in class here. There are competitors, which we're going to talk about coming up next, but NVIDIA is still best in class here. Now, these NVIDIA GPUs are housed in the Supermicro computer racks, and these are 2 to 3 times higher power density than traditional racks from other providers. So Supermicro computer add more inside one rack, and that allows more density. That allows companies to utilize their space more efficiently. So they're also developing new generative AI inference optimized systems based on the upcoming next generation NVIDIA H200 and GH200 and other GPUs, as well as those from competitors, including the Intel Gaudi 2 and 3 and the AMD MI300X GPUs. So the inference systems are where NVIDIA is facing the greatest competition from those like Intel and AMD, and then the hyperscalers like Microsoft, Amazon, and Google are launching their own chips as well. So this is the area where NVIDIA faces the greatest competition, not in the training of large language models, but in the inferencing of large language models. That's when you get a response when you type in a question or a query into the large language models. The training or the development happens before customers see the large language model. Supermicro computer is playing a central role in this, in implementing, installing, and developing this relationship between NVIDIA, AMD, Intel, and the more supply comes into the market, the better it will be for Supermicro computer, because that will allow a broader base adoption from businesses and enterprises. Because right now, it's hard to get your hands on NVIDIA GPUs. If there are more GPUs available, especially at more affordable prices, it will increase demand from enterprises and increase demand for those trying to develop and implement AI models. So this is good news for Supermicro computer and its investors. All right, so next, let's get into its manufacturing. So management saying that the rapid growth of the business is raising the complexity to scale our capacity. Scale our capacity. So this goes to the bigger investing idea of when you're investing in companies like Supermicro computer, which are based on hardware, the growth of these types of companies is more difficult than software companies. A company or digital service companies, for instance, compared to Netflix. Netflix can experience a growth of 200% with no problem, right? It's, they have, whether 100 million people are watching Netflix content or 500 million people are watching Netflix content, makes no difference to Netflix in terms of their capacity to serve. That content is online already. It's been created. It's there. You can watch it if you want, no problem. But with a company like Supermicro computer, to go from where it is today and grow by 200%, it's very difficult because they're selling hardware, they're selling products. They need to manufacture those products. They need to ship those products. They need to install those products. They need to deliver. They need to handle all of that. They need to order the material. There may be trouble with inbound inventory, right? Which they highlighted in this quarter. They had some difficulty with a certain supply, so they couldn't sell as much as they would like because they were limited, right? These are the type of troubles you run into when you're a hardware company, and that's why you typically see hardware companies trading at lower valuations compared to non-hardware companies or digital companies, as I like to refer to them. These are physical, tangible companies versus digital companies where their products are not physical, tangible things, but services, something you consume online, maybe a streaming service, or it could be a software. Whatever the case might be, it's not a physical, tangible thing, and so that allows it to grow with less friction. So to respond, the management team the production teams are making aggressive progress, retrofitting their Silicon Valley facilities and scaling up their Taiwan and Malaysia factories. So that will allow the company more flexibility, more capacity to deliver on these rising demand from its customers. It wants to be able to deliver on this rise in demand. It's not going to be easy. There's going to be some hiccups here and there, some challenges. And what we want to see from Supermicro Computer is solid and steady progress towards this target, towards this expansion. And so far, we're seeing good progress. The key part is we're seeing demand absolutely soar. And so that's great news. That means that the expansion in manufacturing is prudent because you're responding to an increase in demand. Okay, so I'll end with the final part of the video, which I said I would go over their forecast. So now with the robust pipeline of new products in their current year, in their calendar year 2024, they're confident that their fiscal fourth quarter revenue will be in the range of $5.3 billion at the midpoint, and they raised their fiscal year revenue target to $14.9 billion at the midpoint. I believe they raised their guidance in every one of the quarters this year. They've delivered robust guidance. Like they told investors, they expect revenue to increase by north of 100%. And they actually delivered revenue above that range. In the latest quarter, it was 200%. So as enthusiastic as management was coming into 2024, fiscal year 2024, their year turned out better than expected. It's turning out better than expected. It's not finished yet. They have one more quarter left in their fiscal year 2024, but it looks like it's going to be a much better year than they thought, and they already thought it was going to be an incredible year. And that's been the trend with many of these AI companies I've been following, Supermicro Computer not excluded, NVIDIA and others, all coming into the year thinking demand was going to be really strong. It turns out it was even stronger than they thought. So there you have it. Artificial intelligence is absolutely booming. Supermicro Computer, one of the companies that's strongly benefiting from that trend. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.